Hi, this is Jared Faltis. I'm a CPA and a partner with 403B Consultants, an affiliate of Retirement Plan Consultants. And I'm here to go over the Norfolk Public School Retirement Plan, the 403B plan. There's our phone number and our website where you can find more information. Here's a picture of our staff, and we have all the credentials related to investment and tax needs. We're located in downtown Norfolk, Nebraska. We serve over 160 K through 12 schools in Nebraska and across the country. A little bit about today's presentation. We're going to go over the 403B basics, the enrollment process, state of Nebraska pension retirement system overview, and we have an annual retired educator study just to go over what it takes to retire as an educator, and financial planning basics. A little bit about the 403B plan. The 403B plan is money taken out of your paycheck. You sign up and you enroll, and money is taken directly out of your paycheck, so it's easy for you to save for retirement. How do you contribute? There's an enrollment form on our website, which I'll go over. How much can I contribute to the 403B plan? The minimum is $16 a month, and based on 2021, the maximum if you're under 50 is $19,500 for the year, and $26,000 if you're over 50 years old. $26,000 for the year. So as you can see, the range is wide, 16 a month to 26,000 a year. A lot of educators do a certain monthly amount so that they can budget. So whether it's 100 a month, 300 a month, 500 a month, some number that they feel comfortable with. It's really totally up to you, as it's discretionary. A few of the questions that we get, do I pay taxes on the 403B plan contributions? So on the 403B plan contributions, there's definitely two different kinds of 403Bs that we have on this plan. One is a pre-tax 403B. It's taxed when you withdraw it come retirement time, but when you contribute, you get a tax savings on your W-2 right away. So the IRS subsidizes you right away by lowering your W-2 on how much you contribute, but then down the road, when you retire, you have to pay taxes on all of it when you pull it out. The Roth 403B, you get no tax savings now, so there's no tax benefit for doing it now. But down the road, all of the growth is tax-free, assuming that you qualify for retirement distributions after 59.5 and so forth. May I make changes to my contribution? So times get tough, times get better. You can always change by giving the payroll department an advance notice, your HR. I'd like to think that you wouldn't do it very routinely. Use this as just a special situation, but it's definitely your right to adjust your paycheck. A few more questions. Maybe I worked at another place and I have a retirement plan that I'd like to roll over. The answer is yes, that this feature is allowed, assuming that it's a retirement plan, whether it's pre-tax or post-tax. All we need is a statement to kind of look it over, go over it with you, and we can say that, yes, this is approved, or no, it's not. If it is approved, it qualifies for this deferral, then we have to have a form signed by you, and it's on our website. So we can walk you through that process. Just let our staff know. How often will I receive information about my 403B? You'll get information 24/7 online, and you'll also get paper statements quarterly if you opt into that. A little bit about the enrollment process. So the enrollment process, you have to return the forms to the HR department, your payroll department. There's our website where the forms are. And here's a picture of the website to where the forms. So the enrollment form is if I'm a new person and want to sign up and get enrolled, where the name, social security number, date of birth is all on there and how much you want to take out. If I'm already enrolled and all I want to do is change the amount, whether I increase or to decrease it, that's the salary reduction form. The salary reduction form, if I just want to, I'm an existing saver and I just want to change, there's the form. Very simple process of really just stating the new amount and to give that to your payroll provider so they have for their records. So once you sign up, once you enroll, once you start funding some money via payroll, then you have to decide on how you want that invested. We have over 26,000 funds to choose from. We allow other advisors to be attached to your account. So if you're working with the local advisor, you can definitely have them be attached to your account so that they can help you navigate throughout this 403B plan. If you don't have an advisor, or if you just want to pick a model, that's what's on the screen now. We have a portfolio 100, which is 100% stocks using no commission funds. On the right side is the income portfolio, 100% bonds, which is considered more conservative, less volatile, and everything in between. So portfolio 80 is 80% stocks, 20% bonds. Portfolio 60, 60% stocks, 40% bonds, and so forth. A little bit about the state of Nebraska retirement system. So the 403B is separate from the state of Nebraska retirement system. The 403B is your money. State of Nebraska system, you throw money in the system. It is your money, but it does go in the system to help the overall benefit of all educators in the state of Nebraska. It is a defined benefit plan. It really defines how much you are going to get at retirement. That's what a defined benefit plan is. You roughly can contribute 9.78. The school matches that, the district does, and you get a stated amount at the time of retirement as your career progresses. There is a rule of 85, and that rule of 85 has changed if you're hired after July 1st of 2018. But typically what you do is you take the years of service and your age, and if that added up to 85, then you qualify for the full retirement benefits. Now there's if you're entering into the system, there's a minimum age to qualify is now 60. And so really where the money comes from, and this is kind of going into our studies. So we do a study of a bunch of educators, and we summarize that on this slide. And really where the nest egg is needed for the educator is the three-legged stool. One is Social Security, one is the state of Nebraska pension, which is very important. They're both important to your overall security come retirement time. And then the other one has to come from a voluntary way of saving, whether it's just saving in a bank account, whether it's funding a Roth IRA, or whether you're doing a Roth 403B or a 403B. The biggest thing is you are saving. The nice thing about a 403B is you're saving through your paycheck so that it's convenient for you, and it's done automatically. So the 403B, roughly 18% of your overall nest egg has to come from something, and that's the 403B. That's the shortfall in addition to your Social Security and NPERS. As you can see, NPERS typically accounts for 61% of the overall need of a retiree. So if I'm a retiree and I need $50,000 to live on, roughly about 61% of that $50,000 comes from the state of Nebraska on average. So you can count on NPERS, we'd like to think. We can count on Social Security, we'd like to think. And but as you can see, there's a chunk of the pie chart that we need to take care of ourselves and have a formed savings program to maybe take care of that chunk, which is 18% of our overall nest egg. So a little bit about the formulas of NPERS. I really like this cheat sheet. So if you look on the left, years of credible service. If I was an educator and I worked 25 years in the state of Nebraska system, you can roughly take that times 2, and that's the percentage of my salary at retirement that it should take care of. So if I put in 30 years of service, take that times 2, should account for 60% of my overall retirement needs. And that's kind of what roughly on average most educators hit when they're in that system for that long. So the goal of saving for the state of Nebraska, something outside of the NPERS, state of Nebraska needs to be done, and roughly about 5% on average is kind of that goal. Everybody's going to differ from that. You know, if I'm older, don't have enough time to save, it's definitely going to be higher than that. If I'm just getting out of school, then this would shoot it pretty close. So as an example, if I took my salary coming out of school at 5%, roughly 125 a month is at 5%. So if you can't save the 5%, no matter where my salary is at, saving something is definitely better than nothing, and starting early is definitely better than sometimes saving a lot. So if you can start early, save a little bit, that's the best advice for anybody. So a little bit about the state of Nebraska, just how solvent it is, how stable is it? And state of Nebraska is really one of the leaders in the nation as far as taking care of their pension. roughly 92% of the overall obligations of all of the educators getting ready for retirement from an actuarial standpoint is covered. That's a very, very solid plan, and that data is as of March 1st of 21. As Kentucky is one that isn't as solvent. 54% of the overall needs is covered as of today, so they're really going to have to make up that shortfall. Illinois is really considered bad. It's at 23% of the overall need, so they're very underfunded is what it's called. And to put Omaha in perspective, Omaha is separate than the NPERS, and so Omaha is at 61%. They've had some news where they made some bad investment decisions from a pension standpoint. And that's what's caused their unfunded status. So if you're part of the state of Nebraska system, which you are in the public school district of Norfolk, you have a very solvent plan, which is great news. A few financial planning basics. Let's talk about the Roth versus getting a tax deduction now, which is kind of considered the harvest. So the Roth is paying tax now. It's like paying tax on the seed, but then harvest time, all the growth on a Roth, assuming that you qualify 59.5 and so forth, would be tax free. Usually you can't say the word tax and free in the same sentence. So the Roth is very special to where you are tax free. The Roth 403B is very special also, that it doesn't matter what your income is, you qualify for a Roth 403B. If you're used to a Roth IRA, there's definitely limitations who can qualify for a Roth IRA. So Roth 403B doesn't have those income limitations. When it comes to a deductible 403B, you're technically getting a savings now on the seed, but then you're paid tax on the harvest when you pull out towards retirement to live on. So Roth 403B definitely has its advantages. You can see those advantages here. If you look at a 25-year-old saving $200 a month, just based on assumptions, you can see that the difference between a pre-tax and a post-tax, because of the tax rules, where all the tax growth is tax-free, or all the growth is tax-free, there's a $262,000 benefit, can vary based on assumptions, but there is a benefit for being that young and saving in a Roth. As you grow older, that benefit diminishes. 124 is a 35-year-old, 45, 22,000 is a 45-year-old. Even a 55-year-old or a 65-year-old, you could still make the case that a Roth 403B might make sense, because the state of Nebraska system will be taxable to you someday, and Social Security will be taxable to you someday. So here's an opportunity to build a tax-free bucket of wealth to take care of that piece of the pie for your retirement needs. It's nice to blend in a tax-free bucket of wealth. So that doesn't fit for everybody, but this is just general comment that a Roth 403B might make sense in your situation. Once again, let us know if any questions. There's our website, there's our phone number. Work with your local advisor. You can definitely call us. We can help you navigate through these different options in the plans, whether it's Roth, whether it's deductible, what kind of investments and things like that. So just happy to help. Thank you.